You ever thought, should I just go buy gold, get my guns and ammo, and head to the bunker until the apocalypse is over? Okay, so I'm joking a bit here, but gold is getting a lot of attention these days. Let's talk about gold versus the stock market. Which one is better? Well, stick around to the end and we'll figure this out. Fear drives the news and unfortunately drives commerce as well. I remember hearing a commercial advertising gold saying, "Gold has never went to zero." Well, heck, neither has the stock market or the value of soap for that matter. But fear sells. Gold is being bought like crazy right now. Even Costco is selling gold. They've even jumped on the bandwagon. But let's take a look at each one and figure out which one is potentially better. Let's take a look to begin with at gold. Gold over the last 20 years has returned 8.48%. That's not bad. And that's between March of 04 and March of 2024. Now, you can accrue wealth with that rate of return. There's a certain rate of return we need to accrue wealth. And for that, check out my video regarding retirement's worst two enemies. In the worst downturn, gold during that period dropped for 3 years in a row for a total of negative 39.66%. In 2013, it was down negative 27.61. In 2014, it was down negative 0.44. In 2015, down negative 11.61. So that totaled to be down 40%. Now, what are some of the attributes of gold? Well, it's considered to be a hedge against inflation. Gold is often seen as a hedge against inflation because its value tends to rise when the purchasing power of fiat currencies declines. During times of economic uncertainty or high inflation, investors may flock to gold as a store of value. Now, it's considered a safe haven asset. Gold is considered a safe haven asset, meaning it could retain its value or even appreciate during periods of geopolitical instability, economic downturns, or market volatility. Investors may allocate a portion of their portfolio to gold in hopes of mitigating risk during turbulent times. Also, another attribute is just basic diversification. Including gold in an investment portfolio can provide diversification benefits. Gold's price movements can sometimes have a low correlation with those of stocks and bonds, meaning it may perform differently under various market conditions, potentially reducing overall portfolio volatility. By the way, if we haven't met yet, my name is Craig Thompson. I'm an owner at Fourth River Financial Group. We're an investment management and a retirement planning firm. I'm an owner along with Lynn and Nathan, and we also have on board advisor Ron. If you'd like to speak with a fiduciary advisor, my contact information is in the description box below. Also, if something seems confusing or you have a question you'd like to talk, then also feel free to reach out. And if you're getting close to retirement and thinking about retirement more, there is a "How much do I need to retire" quiz that's below. You can fill that out if you would like, and I'll give you a complimentary evaluation of where you stand with your retirement. Now, second, let's take a look at the stock market. Stock market meaning the S&P 500. In the last 20 years, it has done a return with dividends of 10.065%, and that's between March of 04 and March of 2024. Now, what's its worst downturn? Well, that happened in 2008 during the Great Recession, and it was a negative 37%. What are some of the attributes of the stock market? Well, it has potential for growth. Historically, the stock market has delivered higher long-term returns compared to gold. Investing in well-managed companies through stocks or equity mutual funds can provide opportunities for capital appreciation and dividend income over time. Second is dividend income. Many stocks pay dividends, which can provide a steady stream of income for investors, particularly during retirement. Reinvesting dividends can also accelerate wealth accumulation through the power of compounding. A third attribute is ownership of businesses. When you invest in stocks, you're essentially buying ownership stakes in companies. As these companies grow and generate profits, the value of your investment can increase. Investing in the stock market allows you to participate in the growth potential of the economy. Ultimately, the decision between gold and stock market depends on factors such as investment objectives, risk tolerance, time horizon, and portfolio diversification strategy. The rate of return winner obviously is the S&P 500 when we look at the period that I was considering. Some investors may choose to hold both assets to benefit from their unique characteristics and potentially mitigate some risk. Consulting with a financial advisor can help you make an informed decision tailored to your individual circumstances and your goals. In conclusion, they are both valid asset classes, but you assume risk investing in either one. Both will let you accrue wealth if you stick with them for the long haul, but both can have large pullbacks. Keep that in mind. Thanks for watching. Please subscribe to the channel if you enjoyed the content and check out the next video.